farm waste to energy gains ground across the U.S. Farm-based biogas systems are gaining traction across the United States, reflecting a broader shift toward decentralized energy production. Data from the American Biogas Council shows that 631 farms now operate these systems as of early 2026, more than double the total recorded in 2020. Energy output has followed a similar trajectory. Annual production now exceeds 61 million MMBTU, up from approximately 23 million 5 years ago. While still a modest share of overall U.S. energy supply, the growth signals increasing confidence in the sector's long-term role. Investment activity underscores that momentum. In 2025, 41 new systems came online, representing roughly $135 million in capital. Cumulative investment has reached $6.4 billion, pointing to steady interest from both agricultural operators and energy developers. At the farm level, biogas systems are reframing waste management economics. Organic waste streams, primarily manure but also food waste and wastewater, are being processed into usable outputs such as electricity, heat, renewable natural gas, RNG, and nutrient-rich fertilizer. Current infrastructure processes an estimated 25 billion gallons of manure annually, generating enough energy to supply around 800,000 homes. This combination of emissions reduction and revenue generation is central to adoption. Methane capture helps address regulatory and sustainability pressures, while energy production creates an additional income stream tied to evolving energy markets. Shift toward RNG signals market integration. The way biogas is used is also changing. In 2020, most systems were designed to produce electricity for on-site consumption. Today, roughly two-thirds are focused on producing renewable natural gas for pipeline injection or transportation fuel. This transition reflects stronger market alignment. RNG can integrate into existing gas infrastructure and is increasingly used in sectors where electrification remains challenging, including heavy transport and industrial applications. As a result, projects are becoming less localized and more connected to regional and national energy markets. Adoption remains concentrated within specific segments of agriculture. Dairy operations account for the majority of systems, representing about 79% of installations, while hog farms make up roughly 19%. Other farm types, including poultry and crop operations, contribute a smaller share. Geographically, development is clustered in states with supportive policies and strong agricultural bases, such as California, Wisconsin, New York, and North Carolina. Despite recent growth, overall market penetration is still limited. Thousands of farms have the technical potential to deploy biogas systems, but have not yet done so. Nearly 3,000 dairy farms are considered viable candidates, while adoption in the hog sector remains below 2% of eligible operations. Barriers persist, particularly around upfront capital requirements, project complexity, and inconsistent regulatory frameworks. However, improving project economics and rising demand for low-carbon fuels are beginning to offset these constraints. If adoption expands more broadly, the available resource base is significant. Farm-based biogas could generate enough additional energy to power an estimated 7.7 million homes, positioning it as a practical contributor to both domestic energy supply and emissions reduction targets.